Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, and let's figure out what has happened today and to close off, pretty much to close off the month, the year as well. And yeah, the final trading day of 2023. So with all that being said, if you enjoy, don't forget to hit that like button. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live. The link is down below for $3 a month in the description of the video. You get access to all my intraday thoughts, updates, etc. on Tesla as it's moving live throughout each trading day. But with that being said, let's jump into it. Tesla closing down almost 2% on the day. Closing at pretty much 248, just $248.50 per share, we'll say, which unfortunately compared to the market is a bit of an underperformance once again. But again, it's not ridiculously uncommon. Now, it's a little disappointing. This is definitely a little bit weaker than I was hoping to see, but you know, tax loss harvesting, people just maybe, you know, taking certain profits to end the year off, or maybe they're taking, you know, just really selling things at a loss, maybe Tesla at a loss, for instance, to just, you know, offset taxes, right, towards the end of the year like this, right? It's very common, right? And that's kind of what we're seeing here potentially. The market itself, of course, is getting a bit of a red day, though nowhere near as bad as Tesla, though. This can be potentially a doji candle here on a QQQ, potentially not really a hammer, not the best looking hammer candle, but potentially a doji candle on QQQ. So we'll see if that ends up being a bad thing or not for QQQ and tech in general. But specifically looking at Tesla, this is the weekly chart, of course. Let's start with the weekly chart here. So there's one obvious glaring issue that I see right away, and that's of course going to be, well, the candle itself on the weekly chart, right? This is a pretty hideous looking candle. It is, of course, a bearish inverted hammer candle, which, you know, again, pretty much the opposite of what a little hammer candle. I think we have one over here somewhere. Yeah, this is like obviously hammer candles right here, bullish hammer candles, and this, of course, literally the opposite, a bearish hammer candle. Now, obviously, as usual with hammer candles, you need follow through. For instance, like when we had this hammer candle right here, this green one, well, obviously we didn't really have a good follow through. We ended up just essentially setting yet another hammer candle. So just keep in mind, it doesn't guarantee anything at all, right? You need follow through. You need to see, you know, essentially a lot more weakness pretty much next week to potentially even like make this hammer candle a valid one, if that makes sense. Because right now it's just technically, it could be completely irrelevant. It needs follow through. But let's talk about what potential follow through we can get. So yeah, so we came up to 260, got rejected at 265, which is the level I've been talking about for quite a while, right? Which is essentially the top of this overall, you know, final boss trend line that I always call it. And yeah, I pretty much believe that we're going to retrace a little bit more. All right, now it really depends on how the delivery numbers come out on for Tesla on Tuesday, the delivery and production numbers, right? If those come in, ideally, at least at expectations, if not maybe even a beat, I think Tesla can potentially react positively. Because we are selling into the news, right? I actually don't mind selling into news, because if we're just rallying into news, that's where I'd probably be a lot more skeptical, and I'd probably just completely exit Tesla as well, because I'm not a huge fan of rallying into news like earnings or like in this case Tesla's delivery numbers, right? Because that to me tells me it feels like a trap. This, we're doing the literal opposite. We're actually selling off into the news, which is good, right? So buying into the news, a little skeptical, selling into the news, feeling a little bit better there, even though short term, at least right now, it feels a little bit worse. But the way I look at it is pretty simple. So first and foremost, right, if we do continue down, right, regardless of whatever happens with the updates on the deliveries, right, you know, based on just strictly technical analysis, this candle alone tells me that 240, pretty much give or take a few dollars, seems quite likely. It does seem quite likely. Like the MACD is still technically flip bullish, right? We still don't have the squeeze indicator showing a direction on the weekly, nor do we have it on the daily showing a direction just yet, and not even the monthly, I believe. Take a quick look in the monthly. Yeah, the monthly is potentially looking like it wants to flip bullish on both the squeeze indicator and the MACD. So that's important to understand. Like if you look at this just strictly on the monthly, right? Like it looks not bad, right? Like it looks like it really wants to break through. Like it's, you know, we're tapping it. This potentially could just be a massive, massive, massive bull flag that we're in, right? You can argue that at least, right? We have a massive rally, and then we're kind of jumping in between 1, 2, 3, 4, and now we're on the 5th touch point. Usually bull flags have 5 touch points, sometimes 7. And again, not guaranteed, but more often than not, similar to how I told you that, remember that ascending wedge that we've talked about, which we did finally break down from. And I always say these ascending wedges, bullish inside, but bearish once it executes, right? In this case, you know, to the downside, like I always talked about. Well, a bullish flag is almost like the opposite. It's technically bearish while we're inside of it, because we're technically quote unquote correcting while we're inside of both, like after a massive rally, which is the pull, right? We're technically correcting, right? So you can argue that this is pretty much like the pull right here. Pull, massive bull flag or pennant or whatever. And now we're pretty much correcting, right? This whole thing is a massive correction, and it was a pretty substantial correction if you just look at it from all-time highs all the way down to as low as we got to the both, like 75% correction, which is pretty substantial. Even right now that what we're at is a pretty decent correction. Even now we're still at over a 40% correction, which is still pretty decent, right? But again, usually you have five touch points, 1, 2, 3, 4, and now we're on the 5th touch point. And usually the 5th touch point is the one that breaks out to the upside. Again, not always, but similar to the ascending wedge, more often than not, right? There is still a possibility we get 7 touch points where, in other words, we get a substantial rejection and we actually come down all the way back down to somewhere around like the 220s, right? That would be like a potential, right? That is a potential. We come down to the 220s and then we get the 6th to the 7th touch point, and the 7th one is one we break out of. Also a possibility. Ideally, I'd want to see it break out sooner than later. Maybe this delivery number will be what we need to actually truly break out. We'll see. But that's kind of the way I'm looking at it right now overall, right? But again, if we do come down, let's say on the weekly chart, for instance, to that 240-ish area, I just view it as nothing more than a retest of this bull flag right here that we did break out of 2 weeks ago on this weekly candle. That was a beautiful looking weekly candle. So take that into consideration as well. And again, the thing with retests is they're kind of scary, right? When you have a retest like this, it is kind of scary because you're coming back down to these levels and you're like, oh my goodness, what happened to the bullish thesis? Like, where'd it go? But you know, a retest is healthy. It's good not to just completely rallying. It's good, in my opinion, at least. It's good that we're getting these weekly red candles. Potentially even next week, we might get another weekly red candle. Maybe we get an overreaction to the delivery numbers. We get a sell-off down to about 240, maybe even enter the 230s ever so slightly, like 237, 38, something like that, right? Get a bit of a bear trap or get an overreaction. People start panicking and they're selling. And then we get the Uno reverse flip on Tesla, right? It happens all the freaking time, and it really does. And that really wouldn't shock me if that is essentially what happens pretty much on Tuesday, maybe Wednesday, right? And then all it ends up being, when you look at it in hindsight, like a week or two later, is you look at it and you're like, wow, why did I sell? It was just nothing more than a retest of this bear bull flag breakout. So I don't know. That's just the way I'm looking at it right now. The way I'll probably start flipping a bearish-ish if we fall back into the 230s and start closing candles back in the 230s, like pretty much back inside this bull flag. That's when I'm going to start flipping a little bit bearish. And I'm going to flip much more bearish if on the monthly chart, we pretty much drop below like 220 to 215-ish. That's where I'm going to start flipping. Like, that's where I'll probably get pretty bearish. That's where I'm probably going to start selling pretty long dated calls against my shares, at least collect some premium on those. So even though, you know, they're going to probably, you know, get hit pretty decently hard, but you know, that's when I'd probably really start flipping bearish, because if we lose this green trend line on the monthly, that's where things can get pretty ugly. And that's where, in my opinion, we for sure can see like mid 100s again, right? That really wouldn't shock me whatsoever. So, you know, take that for what it's worth, right? Take that into consideration. But that's the way I'm looking at it right now. That's like the overall kind of more broader perspective that I see as of right now. And how I personally see it. Now, that's the downside. But if we do, let's say, just rocket up, the same thing remains, right? I still pretty much want to be breaking above 265. That's pretty much the level that we rejected at this week. And that's the level that remains to be broken in my eyes. 265 to as high as 270. That $5 range is the level to break to the upside, right? Until that breaks, we're still technically in a downtrend overall. You know, this like overall, like, you know, downtrend from all-time highs, we're still in it, right? So I really want to be breaking above that downtrend. That's really, really important to me, which again, 265 to 270. That's going to be the level to break to the upside for the bulls and the bears to defend. And for the bulls to defend and the bears to break is going to be pretty much back into the 230s, and especially under 220 to 215. That's when, in my opinion, things will start getting a lot more scary for the bulls and a lot more interesting for the bears. So that's kind of the overall, that's the broader perspective that I'm looking at, right? Hopefully that gives you a pretty decent idea as to what I'm overall looking at and the levels I'm looking at and what I'm expecting in each respective direction. But let's take a look at it on the slightly shorter time frame. Let's take a look at it, for instance, on the 1 hour or 65 1 hour chart time frame. So pretty oversold. We are quite oversold. Let's open up the stochastic here as well. We're pretty oversold. Like if I just zoom out right here, you can take a look at it, right? The stochastic. I'll zoom in a little bit more so you guys can kind of see it a little bit here, like this. Beautiful, right? So you can see the stochastic, right? Whenever it reaches these really, really oversold territories all the way at the bottom over here, and we're pretty much right at there right now, you know, it's bounced up every single time. It doesn't have to happen literally the next day, but pretty darn soon, right? It doesn't take too long before, you know, we find a bit of a bottom and we get at least some form of rally, right? So take that into consideration, right? We are, of course, pretty darn oversold here. We're almost on the verge of being oversold on the RSI. We can, of course, get more oversold, but, you know, we're pretty down there in the dumps. That's the best way to put it on the 1 hour chart, the MACD as well. we're oversold. We're definitely absolutely no questions about it. Oversold. Same thing with the 15-minute chart, right? Got a bit of a rally here towards the end of the day with the stochastic, you can see. So, that's why based on the way the stochastic looks here, I wouldn't surprise me if we go a little bit lower to, again, like just, about 240-ish, which isn't too much lower from here percentage-wise, right? That's only going to be another, what? Like 3 to maybe 4% drop from here, which isn't too crazy, right? To kind of reset the stochastic back to oversold territories. But, the RSI was setting up a bit of a bullish divergence. You can see, right, as we're pretty much making the same highs. We're not really, the same lows. We're pretty much dancing around the exact same level, but we're making meaningful higher highs or higher lows on the RSI. So setting up a little bit of a bullish divergence. Nothing substantial, but, it's kind of making some signs over there. Now, one thing I've been telling my members about is the potential that, maybe, just maybe, we might be setting up potential inverted cup and handle, right? This is, of course, the cup right here, and this, of course, can be the handle. I just drew this as a rough demonstration. I don't know how exactly the handle will look, but if we pretty much bounce off from here, there's the potential that this will be nothing more than a potential cup and handle pattern. And if that's the case, that's where you bring on the Fibonacci. You go from the top of the cup in this case to the bottom of the cup, or I guess technically that's the bottom, this is the top, whatever. And you go like this, and then you look at the levels, right? The main levels to look at here is going to be pretty much anywhere between 254 to 258. Those are going to be the main levels to look for the potential cup if this is the pattern that we are in to form. And that's where we potentially will get to one of those levels and probably reject at one of those levels between 254 and 258, and then probably fall back down essentially even further. Again, it'll look something like this, give or take. It'll look something like this, right? And then we break down, fall back down even further, and that could be potentially what gives us gets us to that 240-ish range as well, right? Again, I'm not sure if this is the actual pattern that I'll set up, just something that I'm thinking of, that I'm kind of potentially seeing the, the makings of, if you will. So that's important to understand as well. Now, essentially, Tesla, very, very oversold. I still think there's a bit more room to the downside. Really wouldn't shock me. I'll personally start buying at about pretty much $240 more or less on the dots, with the stop loss pretty much not too far under, which around like 237-ish, give or take. I haven't exactly decided, exactly where, but around that level, especially if we start closing candles in the 230s, which would not be the best thing to see for me at least. But that's kind of the main thing I'm looking at. Now, again, don't forget, we also have the volume profile. This is pretty important to understand. We are, of course, entering some pretty high volume territory within this 240-ish range, especially when you look at it on the weekly. You can see this is a beautiful example right here, right? The weekly time frame is one of my favorite time frames lately. It's just so clean. It just, I don't know, it just looks great. And it just makes it very easy to just understand what the hell's happening. But regardless, taking a look at the weekly time frame, right? If we do drop down a bit even further to, like, let's say 240-ish, right? Give or take a few dollars, we're still in this overall massive volume profile, right? Where you can see it's like kind of sticking out, which again, in theory, should act as a support, right? This is where a lot of volume, a lot of shares are traded, bought and sold. And then in this case, because we're coming back down into it, it should be acting as a support, right? But you can see on these candles over here, when we were coming from down up into it, it was acting as a resistance. A lot of wicks over here, a lot of like 3 weekly wicks in a row, like pretty large wicks above the candle that constantly got rejected pretty much right at where this volume profile, right? This massive volume is at, right? You can see very obviously these weekly candles, right, constantly getting rejection, and then eventually we finally pushed through. Beautiful, nice little candle, pushed through it, broke out of the bull flag, and now we're coming back in to retest that area that we had so much issues before. Which again, if we come back down to retest that, not only will that be a retest of the bull flag, but we're essentially retesting exactly the level that acted as a resistance, which is again give or take 240, that constantly rejected us over and over and over. So we're also coming back to retest that level as well, and hopefully turn it into a support. And if we do, and if we turn the 240-ish area to support, turn the bull flag breakout into a support as well, and just a successful retest, we turn that into a new base, and I think that can be the launch pad to get us up and essentially start off what could be a great January of 2024. There's also what's called the January effect in the stock market. I'm not sure how still plausible it is, but essentially the idea behind it, or the premise behind it, is the fact that, well, a lot of people are selling stocks in December for tax loss harvesting, or for many, many reasons, right? But in January, people usually buy back those stocks, right? The tax loss harvesting is done. They buy back those stocks they sold. They're buying back, they're just buying stocks for the year, right? Because it's like a nice way to kind of see year-to-date returns when you're buying in January. People get their paychecks and, bonuses, and they're obviously investing that into the market, just all these kind of factors. And January tends to be usually, not always, but usually pretty good at that, right? For instance, if we take a look at the seasonality chart over here, let's switch it over to monthly. Yeah, you can see January is a beautiful 60% month. I mean, so was December. And though December, I think, was still a pretty decent month for Tesla, if I'm not mistaken. Let's take a quick look at it. Yeah, December was still a pretty decent month. Actually, all that being said and done, it's still technically green. It wasn't the most green thing in the entire world based on how we just closed, but we are still technically up a pretty decent amount, right? a few percentages. So technically December was a green month for Tesla, even though we ended pretty poorly. And January is also a 60% green month. So anyway, that's the main thing I'm looking at, and that's the main thing I'm seeing. I personally think January will be a good month. I think starting February is where things can start getting a little bit of an issue, especially with elections coming up, right? And what is it, like sometime in September probably? I can't remember the exact date, but usually once the elections and all that drama, if you will, around elections really start rolling, which usually starts February, March-ish, for that kind of period of time, for the few months, very volatile, very volatile market. I remember when it happened a while ago too, back when it was like Biden versus Trump, I think it was pretty volatile. But you know, the things can get volatile right there. It's, that's where things will potentially get a little bit more, you know, concerning, if you will. But all in all, I'm personally expecting. I think Tesla's still looking good. I know it's short term looking bad. I still think 240 is possible, but overall, the bigger picture, in my opinion, I hope I don't have to eat my own words. I really do, but it still looks, in my opinion, it still looks good. And in my opinion, this is still overall a healthy retrace. And I think this is, in fact, I think this is actually a very healthy move, because if I just continue seeing green candles and over and over and over, and green weekly bars over and over and over with no red in sight, that's where I start getting a little bit concerned. But keep in mind, we're also getting this pretty decent red on a pretty low volume. Granted, Monday, of course, was an off day, but even if it wasn't, I don't think it would have been that much higher of a volume. So pretty low volume as well on a pretty bearish looking candle, which in my opinion is actually not a bad sign for the bulls as well. So that's what I'm seeing, and that's what I'm expecting. So let me know what you think down below. If you enjoyed the video, don't forget to hit that like button. And yeah, thank you for being here. And hope you had a good 2023, and I think we'll have an even better 2024. Fingers crossed, of course, but a bit of a longer video. Don't want to make this video too long. There's a lot to talk about, lots of, you know, wrap up the year. But yeah, thanks for watching. If you enjoyed, again, don't forget to hit that like button, and I'll see you all on Tuesday for what could be a pretty substantial day for Tesla. So until then, thank you for watching. Peace and Happy New Year.